is Delta Reaction Zones from Boss Waves, an order flow driven structure tool built to show you where price reacted because real traders actually stepped in. Here's the key most traders miss. Price alone doesn't move markets, aggression does. Delta measures that aggression. It tracks whether buyers or sellers were the ones forcing trades through the books. When Delta expands, someone is committing size. When it stalls or reverses, that commitment is changing. This indicator builds zones from confirmed Delta turning points, not from arbitrary price levels. Those turning points mark where aggressive flow peaked, stalled, or flipped, which is why price often reacts when it returns there. Before we go further, make sure you join our Discord using the link in the description. That's when new indicators, updates, refinements, and experimental Boss Waves tools are released first. Now, let's break down what this indicator is actually showing you. So if we take a look here on the ETH 3-hour chart, we have our main feature being our delta-driven reaction zones. These are created from cumulative delta or delta rate of change pivots. This matters because a price pivot just tells you where price paused. A delta pivot tells you where aggressive buyers or sellers stopped winning. That distinction is everything. These zones form at points where one side exhausted or lost control, which makes them far more likely to matter when price revisits them. Our second main feature is the option to choose between cumulative delta versus delta momentum. If you go into the settings tab here, you'll see we have our pivot source, and you can select between these two. You can select cumulative delta to track sustained pressure and longer term positioning, or cumulative delta rate of change to highlight sudden accelerations and absorption events. This lets you tailor the indicator to either slow controlled rotations or fast impulse-driven markets without changing your entire framework. If we go back to our main chart, you'll see that all of the zones vary in size, in width. So these are volatility adaptive zone construction. Every zone's thickness here is calculated using ATR, so zone size reflects current market conditions, not fixed assumptions. High volatility means wider reaction areas, like you can see here, whereas low volatility means tighter, more precise zones, for example, areas like this. This keeps delta levels actionable instead of visually misleading, especially across different sessions and timeframes. We have our built-in buy versus sell flow breakdown. Each zone includes our buy side percentage and our sell side percentage, and then a net delta impulse over the selected window. You can see that zones are labeled as buy flow, sell flow, or as mixed, so you immediately know who is in control when the zone formed. That context matters because a level formed by aggressive buyers behaves very differently from one formed by aggressive sellers, even if price looks identical. If we have a look at a couple of examples, if we have a look at this area here, where we have an area of sell flow, we can see that the volume of buyers was actually greater in this area. This means that buyers have been exhausted, and it's likely that we'll see downward pressure on price. And we can see this right here, and this being an area where price has interacted multiple times. So you can see we've interacted with price once here, it's pushed to the downside, we've then revisited, and we've pushed to the downside again, and then the third time we've pushed to the downside substantially until we've reached our buy flow zone. We have intelligent zone merging and structure cleanup. So if we have multiple delta reaction zones of the same type overlap or form closely together, they automatically merge into a single higher quality structure zone. This reflects reality. Repeated delta reaction zones in the same area will strengthen that level. So if we look here in our settings tab, if I unselect merge overlapping zones, you'll see in this area we've had two buy flow zones and they're overlapping with one another. But by clicking the merge overlapping zones, it forms a singular zone, which makes it much clearer to see on a chart. Not only that, we have our reclaim and re-entry context signals. So with those, when price crosses back through a zone's midline, the indicator marks support reclaims on lower zones and retest re-entries on upper zones. These aren't random signals. They highlight moments where price re-enters an area previously defined by aggressive flow, which is often where continuation or failure is decided. Delta reaction zones isn't here to tell you when to click buy or sell. It's here to show you where real money previously forced the market to react and how price behaves when it comes back to those areas. If you ignore delta, you're only seeing half the market. This tool fills in the missing side. participation, pressure, and intent. As always with all Bosswave's indicators, we have tooltips for each of the inputs to ensure that you can tailor and understand each input to your exact trading requirements. So that's it. For updates, refinements, and upcoming Bosswaves releases, join the Discord using the link in the description. That's where everything drops first. If this added value, like this video, subscribe for more Bosswaves tools, and I'll see you in the next breakdown.